This conference will now be recorded.
Just say something, Adriana. I know the past recording links. I've had some issues with that link working. I think you're storing those in Google Drive or something. The links haven't
Mhm.
worked for me, so just wanted to mention that.
Oh, okay. I'll definitely look into that. What's the error that you're getting?
I think it's something like file not found, a URL not found, find or something like that. I can't. I don't. I can look it up and put it in chat.
Okay, I'll make sure that I fix that. So last session, that one should be a Google Drive link. The two prior sessions should be through GoToMeeting. So if you're unable to access both of those, I'll definitely have to change something.
Should we just be sending the GoToMeeting link to everybody as opposed to putting in the Google Drive?
I'm sorry, just one more time.
No, should we just be sending everyone the the GoToMeeting link for the recording? Copy the link.
Yeah. So that's what went out both the first and the second time. For the third session, there was a little bit of editing we had to do because we left the recording on a little too long. So that's why that one was a Google Drive link.
Okay then, thank you. Thank you.
Can I ask people just to go ahead and get, I see a couple people logged in the Kahoot while we wait until we're ready to get started.
Oh, we need to do that. Okay.
Do what now? What do we need to do?
So you log on to www.kahoot.it and you put in this game pin.
I've been busy trying to get rid of that. I was trying to figure out why is this on my screen. I've minimized it all the way down that I can. I'm trying to you can see on the other side over here, I got my other laptop, which works terribly slow. I've been going back and forth trying to get up on that one. Thank you so much.
What is the pin? What's the game pin?
So the pin is the 886-1674. And can I get to know everyone while everybody's loading in? Is that okay, Ron? Can I?
Yes.
Okay. You're not going to do a formal introduction. I'm just going to jump in.
Address all these questions to Adriana. She's right there.
Okay. No, I'm just...
Yes, I will. Let me start off by introducing you. I do want to make a note that not absolutely everyone is here yet, so we hope that a couple people will trickle in.
Okay.
But for everyone that is here, this is Ms. Charmaine Davis. She's a certified public accountant coming out of the Hartford Business Center. And she's actually a native Baltimorean who brings over 20 years of financial management experience that she's dedicated to the government and also the nonprofit environment. She's also an advocate of community schools, and she's been working with the Hartford Business Center to collaborate with community organizations and support the youth with workforce development, job placement, training support, monitoring, and evaluation. So she's really going to be a great resource for everyone to have, and we're very excited to welcome her and learn a little bit more about the finances of starting your own co-op.
Thank you. I wanted to, and thank you, Ron and Adriana, for the support. I wanted to keep it light. I was sharing with Ron, this was the end of one of our second tax deadlines of April 15th, so I was kind of brain fried. So I wanted to keep it light with accounting, but also address some of the questions and concerns and get rid of some of the anxiety that may come around business. So as everyone introduce themselves, I want you to answer one question for me. So outside of you giving me a little bit about your business, I want to ask you, how do you keep track of your personal budget? And that answer could be you don't have a budget. That answer could be you keep a little written ledger in a checkbook. It could be whatever it is that works for you. So give me your name, your business, and how do you track your personal finances?
Are we just jumping in, Ms. Davis, or?
Yeah.
All right. Well, good morning. My name is Tiffany Page, co-founder of Virtual Village, and currently I am using a written ledger to track my personal finance currently.
Okay,
But I
so
like to move
Virtual
to something
Village.
electronic.
Okay, so Virtual Village. Give me a little 10-second blurb about what services you offer.
We offer virtual learning support services to students, school staff, families, and actually the community at large. We've been working with businesses as well.
Excellent. Thank you, Tiffany.
Thank you.
All right, who's next?
I'll jump in. I'm Kalu, I'm Africa, out of Indianapolis, Indiana. A member, manager, owner of the KI Construction Cooperative. We are a shared service cooperative that works with, trains, supports, and coalesces the attributes of other construction business owners. Personally, I use Microsoft Excel to manage personal budget.
Love it. Okay. Nice to meet you, Khalil. And from
My
Indiana.
pleasure. Thank you. My pleasure. Thank you.
All right, let's keep the party going. Who's next?
Second,
Hi, my
probably.
name is Marilyn Butler. I'm in Baltimore, Maryland, and my business is MP Butler Education and Healthcare Solutions. My business just got named and got an EIN when COVID hit. And so we have not been doing really any business at all because I did not want to be out in the field with COVID positive patients. I just retired from nursing after 51 years in the field.
Wow. Thank you for your service. Now, how do you keep track of your personal finances?
My personal finances?
Yes, ma'am.
I guess I really don't keep track of them because I just have so many it's so limited from what I'm doing right now.
How about in the past?
In the past, I don't know. I guess I will put it this way. I was just maybe eyeballing it and I knew what I was doing. Look at that. Really was not doing anything like an official following of what I was doing.
Okay, that sounds good. Thank you, Miss Marilyn.
You're welcome.
Hi,
I can say one thing though. I did have my investments are being tracked by my financial advisor.
This is a no judgment zone, Miss Marilyn. Yeah, I know you are.
But I'm just thought about, some of my money. Someone is tracking it.
Yep, somebody's tracking. Yep. All right.
And I'm Jeff from Las Vegas, Nevada. We don't have a business as of yet, but I did at one time keep my own personal finances off, the checking account that I used to have, and just kept the balance in the items that ever I used, a real paper checking account. And then I stopped that after 5 or 8 years of marriage, and then let my wife do the balancing. But we'll probably hopefully have an accountant be able to do our budgeting with our involvement, of course, and keeping track of it.
So you said currently, Mr. Jeff, you don't have a business. Are you looking to support someone else's business? Are you looking to create, or are you just here to,
Yeah, looking to create or learn how to gather enough other like-minded people to start a business and be involved with it. That's what I'd like to do.
Nice. Well, welcome, Mr. Jeff.
Thank you.
I'll jump in here now. So I think you all know me by now. I'm the intern here at NDCC. I've been emailing you, Ms. Davis, so I think everyone does know me. But I want to take this moment to introduce our other intern who's brand new here at NDCC, and that's Michelle. So I'm going to hand it over to her, and maybe you could just say where you're from, the school you go to. We actually go to the same school, and just a little bit about yourself.
Hi everyone, I'm an incoming intern at NDCC. I also go to Rutgers, which is the same school Adriana goes to, and I'm currently a freshman studying business.
Very nice. Adriana, are you a major as business as well?
My major actually majored in mathematics, and I'm now pursuing a master's program in public policy. So that's where I am.
Okay.
Yeah,
nice.
but I'm so interested in the policy work around cooperatives. So I'm just very excited to hear, the nitty-gritty of the financial details there.
And that's beautiful. You'll know how to read the stats and the data and transfer it to policy. Beautiful combination. Mm-hmm.
Thank you.
I can jump in there. Damon Tizia from Indianapolis, Indiana, working in the Kepler Institute alongside Khalil. Our particular co-op has been an ongoing kind of community program, but we're trying to look to formalize it as a co-op and bring in cooperative members. It's a creative cooperative, so supporting and building ecosystems and culture for local artists, musicians, makers in the central Indianapolis space. Oh, and I use a combination of things. My wife, mint, and spreadsheets.
Nice. I love it. And I'm sorry, what was your name again?
Damon Tizia.
Damon. Gotcha. Okay.
Hi everyone, I'm Crystal Foreman. I'm the owner of Holistic Wellness and Health in Baltimore, and I'm also part of the Plantation Park Heights Urban Farm, where we're looking to do the co-op model. I used to be great at tracking my finances and budget, but I do not do anything now. So I used to do paper, Excel, but yeah, I'm not tracking anything. I'm really bad right now.
No problem. Sounds good. Thank you, Crystal. Welcome.
Thank
Good
you.
morning. I'm going next. LaRon Martin from Virtual Village. Personally, I use the app Spendy to help with my finances, me and my son. So it's just an app that's linked to both bank accounts, and you can set, your monitor what you want to spend on certain things, let you know when you're on track and when you're out of pocket.
I always have one superstar in the group that got to show off and make even the presenter look bad. Excellent. Welcome, Mr. Martin. Thank you.
No worries.
I noticed he said he's got his and his son's.
Yeah.
Yeah.
He just...
Just drop that domain in the chat.
Yeah.
Yeah, that's good stuff. All right. Do we have anybody else?
Hi, good morning, everybody. My name is Jill, and I'm an urban farmer at the Plantation Park Heights in Baltimore. I am also the education outreach person there.
Excellent. Okay, Jill. So how do you track your personal finances?
Oh, I have I just keep kind of a composition book and have different categories for each week. And at the end of the week, I kind of go through um my online bank statement and kind of keep track of what I'm spending in which category and try to um set a budget for the following week of what I'm going to spend on food and gas and stuff like that.
Okay, so Jill is our second runner-up superstar here. Okay, excellent. Welcome, Jill. Thank you. Did I hear Josiah? I see his name up here. Did I?
Good morning. How's everyone doing? My name is Josiah. I'm on the NDCC board, new board member, and I'm also part of the Black Atlantic Strategic Development Firm and Cooperative Advisory Board. As far as accounting, I use wave accounting, and I also do active foreign exchange trading. So I basically track a lot of my saving and risk capital in forex markets, and I use wave accounting for my business and personal business.
I'm sorry, we had a rough connection, but I think I heard this that you use Wave, but I didn't quite hear it on the business. So if you put your business in the chat, it sounds like it's a group chat.
Okay, sorry about that.
Thanks. So Adriana, is that everybody?
That is everybody, so we should be good to get started.
Okay, awesome. So the reason why I wanted to know a little bit about your business, and I also wanted to hear about how you track your personal finances, because usually that behavior transfers to how you track your business finances. If that's not your strong suit personally, then it may not be your strong suit in your business. And the reason, and that may be something that you want to speak with someone early on. Okay, so blank Atlanta. Okay, on how to track it. But to let you in on a little secret, I don't use any of the waves. I'm old school pen and paper, and I've been an accountant for the last 20 some years. I'm more of I have to see the numbers. So I usually log into my bank account every morning, like how young people go into Facebook every morning. I log into my bank accounts every morning, and that's how I track it. Once I do my annual budget, after that, I log in. So even if it's one penny that's missing from my account, I'm disputing it. So I'm on that anal side of it, but I'm not as good as some of other people who I've heard. So kudos to the people that are doing that work, and kudos for the people that recognizing that's not your strong suit and you're okay with passing it on. So I think everybody deserves a pat on the back. So with this, I have this little presentation, so to keep it easy on me, I'm trying this for the first time. It's through a Kahoot. I'm trying to make it interactive, and we go through some of the accounting lingo and financial statements and see how they're important with your business from the very beginning. I heard a lot of great initiatives that you have going on, but at the end of the day, and I know this is always hard for businesses, regardless if you're a nonprofit or social justice, whatever your mission is of your organization, at the end of the day, you have to make money in order to sustain. if you're going to devote 110% into this in the business, you have to live. So whenever we go into a business, we have to have our mission first, and how are we monetizing? How are we generating revenue enough to cover all the resources needed to carry on that mission? So, all right, let's get started in our presentation. It looks like everybody got a chance to log into our Kahoots with the pen. All right, I'm gonna try this, then I'm gonna hit start. Now, I'm having a hard time multitasking and seeing the chat screen. So this is very informal, and this is for you. You can, uh-oh, it says I only have 6 people. Am I missing someone who haven't logged in? I got 7. So if you have any questions, just jump in. This is a back and forth. This is not just me talking, because accounting will put you to sleep. So I want you to, jump in with any questions that you may have. That's good enough. So here's our co-op financial statement. So our first question, what is accounting? How do you see the whole purpose of accounting? So you just click on what you see, what answer best fits this question. Excellent. It's the process of keeping financial records. All right, I got already experts in here, so we're good to go. So now we're just gonna go through the fundamental. Oh, look at this. It tells us, okay, you get points. Okay, I may have to get some prizes. Who has the most points? This just got competitive. Okay. So this is the fundamental of accounting. That this equation right here is your assets equal liabilities and equity. Everything feeds into this one equation. Your assets is what do you have? You have a building, a car, a computer. It's the physical of what you have. That liability is what do you owe on it? What debt is associated with that asset? Car loan, mortgage, any type of, if it's a credit card that you have to pay off. The equity, that's what's left. That's actually what you own. So you can actually have a building that's $100,000. You owe $50,000 on that building. Your equity is $50,000. So your assets, what you have, liabilities, what you owe, and equity is what you own. All right, so now I'm gonna do a little test on to see where our knowledge skill set is. What is a balance sheet? Have we heard of it? I know our popular statement is the profit and loss. But I want you to know, see if any of you've heard of the Okay, not everybody wanted to participate on this one. Okay, so it's a report that lists the company assets, but this shows me we're not familiar with balance sheets because everybody hears about the profit and loss and they don't see the value in the balance sheet. But the balance sheet is the core of your business. That's what's most important because the balance sheet gives the organization's financial situation at a particular point in time. And it's accumulation of years, so of transactions. It shows your cash at a given point in time, who owes you money, your accounts receivable, who you owe money to, your accounts payable, and it also shows your equity. So I want you to think of the balance sheet is a balancing act. It always have to equal, your assets always have to equal your liabilities plus your equity. Hence, they call it the balance sheet. So here are examples of accounts that show up on your balance sheet. I mentioned your cash, that's your bank account, checking account, investments, stocks, all of that, it's considered cash because it's considered liquid. Whatever we can access to less than 30 days where we can pull it out of the bank, we consider it cash. Accounts receivable, that's who owes you money. You rendered a service or a good, now they owe you money that you billed for. Prepaid expenses, You prepaid your insurance for the whole year. It's considered an asset because at any point, if you cancel that policy, you are entitled to a refund of the unused portion of that policy. Inventory. If you keep inventory on your books, if you're selling books, t-shirts, whatever it is, that's considered inventory until it's sold. Investments, your land, buildings, furniture, and equipment. Here are some of your liabilities. This is your accounts payable. These are debts that's due within 30 days. If you purchase some office supplies on a 30-day credit, it's considered an accounts payable. Your accrued payroll, we'll go to that. Deferred revenue. So these two are a little tricky. It's if you owe someone money, but payroll has not hit yet, but they have worked and earned their time. Your deferred revenue is on the opposite end. If somebody prepaid you for a bunch of services or rent, so normally it's if someone prepays rent, say they give you the next 6 months worth of rent. This is considered a liability because at any point within if month 2, they decide to cancel that lease, you owe them the money back. So we have to carry it as a liability. If you have any accrued interest on any type of loan that you may have. And this is where we go into our co-ops, member deposits. If we have a co-op and we have, if this is a housing co-op and it requires our members to give a deposit, like a security deposit, what we're saying is this is technically the members' money. We're just holding this deposit until a particular item or service is rendered or at the end of the lease term, and just to ensure that there's no damage to the property. And loans payable, any loans or mortgages that we owe. Now, equity, this is the sweet spot. So when you go to if you want to get a personal loan, the one thing they're going to ask you, if you want to leverage it against your house, do you have any equity in your house? All it is taking what your house is worth, less the mortgage, and then that is equity. And the same thing applies to the business. Your actual assets, less the debt you have, what's that equity you own in it? So it doesn't matter that if you have all of these high assets and you also have high liabilities, it's very little equity. What I recommend most businesses starting off, that sweet spot is having those low liabilities, because that's going to increase your equity as long as your assets are increasing. So here's an example of what a balance sheet looks like for our business. You'll see all of the accounts that we listed, our cash, accounts receivable, restricted cash. This is if someone gave us cash and they put a restriction on what the cash has to be used for. Land building, and you see how we have our total assets. And then on the right-hand side, we have our liabilities and our equity. And you see these two numbers match, the 147 and the 147. Okay, so I'm gonna stop there. Has anyone seen a business balance sheet? Have you ever paid attention to it?
Yes.
Okay. Give me 1 second. Okay. Okay, sorry. I was trying to see you guys. I can't see you. Okay, so when you see the balance sheet, is this something, what sticks out to you when you look at a balance sheet? And be very honest. If I showed this to you and it's someone's business, what would be the first thing you would look at or look for?
Accounts receivables and accounts payable.
Okay. Accounts receivable, accounts payable. Somebody else?
The first thing I probably would look at was the total assets. That's just me.
Okay, nope, that's good. You want to look at the bottom line. You want to see how much it's worth. Okay.
Yeah, cash flow. See what we're doing in cash flow. You know what cash we have on hand and not.
What cash in? Okay, so let me ask you, if all of us were instant millionaires and we had $100,000 to lend to some stranger off the street, We know nothing about their business. We don't know anything about them personally or any of their background. We ask them for their balance sheet. What would be important for us to lend them that $100,000? So now we have different lenses. So now if they come in to borrow the money, of course, their cash is going to be a little low because they want to use our money. But what are some of the questions we would ask based on the balance sheet and based on making sure we will get our money back?
What their liabilities are?
What are already their current liabilities? Yep.
Are we looking at the assets versus the liabilities to see like in this case, it looks like they kind of evening out, like they're not really necessarily making anything. So we want to make sure that the assets are more than the liabilities, at least.
Right, and that's a good point because what can we? How can we secure the loan if our assets are already leveraged to capacity? How can we leverage to ensure we're going to get our $100,000 back? Because right now, if we look at it, our building is $80,000, and we have a loan payable of $80,000. So we can't attach to the building. That's already leveraged. We had $20,000 in land. That's something we could leverage. Now, what about this restricted cash? What do y'all think about that?
Well, I guess the cash can only be used for a certain specific something, but that's what it is.
So that would be no use to us. That's good. So we have a small accounts receivable and we have the cash, but then I would have but they do have some slight equity of 54,000.
Is the balance sheet the only piece of information we, at least in this exercise, that we have to look at? I'd be interested in some other things outside of the balance sheet. Honestly, truthfully, some of their history, relationships, the work, other things would influence. The balance sheet would be a part of it, obviously. But if somebody's looking for money, I could deal with obviously imbalanced balance sheet if there's, starting a business or something or needing some support. But I'd be real interested in relationships, building other things like that as well. So.
Thank you. And you know what? That's exactly the whole point of this exercise. When you go to a bank and ask for money, they know nothing about you. And if you give them a couple pieces of paper, the numbers look fine on paper, but they want to make sure that they're going to get their money back. And how do you paint the best financial picture that you can to ensure that you're going to leverage and make the most out of that investment that they're investing in your business and make sure that they get their money back within a timely manner? And you're right, it's not just the balance sheet, it's not just the income statement. It's actually your story that helps them to believe that you're going to be able to have the gumption, because sometimes your balance sheet and your income statement is not a true depiction of your resilience, of what you've had to go through, how you've pivoted during this whole pandemic, or how you have really put the pedal to the metal to make sure that everything is sustaining. So it's a part of, it's a whole package that you have to pull together. And that's what accounting is. All it does, it puts numbers to your story. It puts numbers. We can pull together a package that shows, okay, yeah, our revenues decreased over the last 5 years. However, when we shifted our marketing strategy and we added an additional 30% into marketing, our revenue soared by 50%. It's just me telling it, or an accountant telling your story through numbers to helping the banks or investors, lenders to understand fiscally how your business is pivoting. Okay. So now we've talked about our balance sheet. What would you say the main purpose of this balance sheet?
I would say to give an indication of real-time dollars, real-time, real-time dollars, real-time. Not all, maybe not always, 100% accurate, but at least you got to have an idea about, real-time. Again, cash flow is important for me. Just thinking about, what can we do today if we got to make a move? Yeah, absolutely. Yeah.
So, and with the balance sheet, it looks at solvency. So liquidity, how much of the assets, I think Tiffany mentioned it earlier, you're looking at your assets versus your liabilities. So it's just looking at, so I see someone put in, and with the liquidity, that's a portion of it. But at the end of the day, how much are you worth? What's the net, what's the equity? So it kind of pulls all that information into the
I have a question.
mm-hmm.
Can you explain the difference between solvency and profitability?
So profitability would be, that's at the period of the time. So it's your income less your expenses. That's looking at profit. You're looking at revenue versus expenses. Solvency, you're looking at the investment of time. It's not the revenue versus expenses, it's the investment versus your liabilities. It's looking at your equity. That help?
Yes.
So we can move on to your income statement. And that does not, that income statement, it feeds in, and I'm jumping ahead, but it'll feed into your balance sheet. So to give you a whole picture. Okay, I think this is the last balance sheet question. What does the balance sheet show? So the correct answer was the overview of the company's financial situation at a specific point in time. So your balance sheet is as of such and such a day. What was the another answer? How companies' financials balance. Now the balance sheet does have to be balanced, so I can see where that can be a trick. But this is one of them. This is the overview of your financial situation. Good. But thank you. I appreciate you. But okay, Martin is still in the lead. Okay. All right, so a couple of people have mentioned, we were talking about profitability and profitability. So now we're going to look in the income statement. So this one, the balance sheet was at a specific point in time. The organization's financial performance over a given period of time is the income statement. So the income statement, the best way to differentiate, the income statement starts off fresh at the beginning of each year. It closes out. So from January to December, if you're on a calendar year, that's all your information it shows. January to December. And then that next January, it starts off with 0. Your balance sheet is an accumulation. It never starts over. So it from January to December, it has accumulated, if you've been in business for the last 10 years. It's a tracking mechanism. If that makes it a little easy, where your income statement, it does a restart at the beginning of each year. So here are some examples of our income and expenses. Our income, also known as revenue, if we are in a co-op, the member charges or assessments, if there are any fines, annual membership dues, if we have any investment or interest income off of any investments made. Now, some of our expenses. The expenses are items that when we make purchases, if it's under a certain threshold where it's not considered an asset, then we would expense it on our profit and loss or our income statement. So some of our expenses are maintenance and repairs, staff salaries, depreciation, utilities, and so on. The reason why I'm a little tricky about this, because I noticed we had some construction cohorts. That maintenance and repairs can get a little tricky. Say, for instance, you have a building that's on your balance sheet and you're doing the repairs to the building. We have to be real careful on how we capitalize or expense out the repairs. So it's basically we have to have some type of policy to say, okay, if the repairs exceed X number of dollars, and that dollars is determined on your organization, but usually I'll see maybe exceed $5,000, then they will be reported on your balance sheet. However, it's 5,000 or less, then it's expensed out that particular year. So the difference is if it's over the 5,000, you would do something called is depreciate that asset, where we're allocating a portion of that, we're writing off a portion of that asset over its estimated useful life. Everybody with me? Okay, here's an example of our income statement. And this is our most popular financial statement where we have the income of revenue, less your expenses. And this is where we show our profitability. So say for instance, this is for the year, we show a net profit of $4,000. Okay, so this is where it also gets a little tricky. If we're a LLC, say we have 2 members, we have to keep in mind that net profit, that's what we're taxed on. So in a beautiful world, what do we want to do? We want to minimize taxes. But then on the flip side, if we're trying to go get a bank and use our income statements to leverage to getting a loan for the property or small business on whatever it is, this is what the bank is going to look at. Along with our balance sheet and our other statements, they're going to say, okay, well, how profitable are you at the end of the year? And what's the likelihood you'll be able to pay back this loan based on how much revenue you generate and less your expenses?
Mrs. Davis, I have a question. Hello?
Mm-hmm.
Okay, so can you just back into the construction work a little bit? This is just I'm just curious on our balance sheet or our income statement. Some of our work, we're not paid, we could be paid 3 to 6 months out for some of our work. And relative to, approaching a financier for loan and all that, this is hypothetical right now, but something we had the conversation about.
Right.
You're not necessarily you document that work, but that money's not in your account. It might not be, and let's just be honest, it might not be. It could be 90 days or whatever. I mean, we've been in some situations.
Right.
How do you?
But that's an accounts receivable on your books.
Okay.
So
Okay. So
we want to show, yeah. Go ahead.
okay, that's what I wanted to know. Okay, that's what I wanted.
So it will be accounts receivable, and I'm going to tell you the beautiful thing about construction work. Your contracts are your money. So you can go to the bank and leverage that contract to get a line of credit.
Okay. I thought they had to see that. Okay, thank you. That's great to know. Thank you.
Yeah. So with our net income statement, this shows the picture of how much revenue are you looking to generate, and are you strategic in how you spend your money? Are you just using it to survive? Are you just using it to break even? How are you managing? So when I look at this income statement, I say, okay, they have a net profit of $4,000. But when I back out a couple of things that are non-dollar expenses, one of them is depreciation. So remember, that's what I talked about when we have an asset on the books and we write that off, a portion of their useful life. So this year is $5,000 of depreciation. That wasn't any money we came out of pocket with. That was probably an asset we bought 2 years ago, and we're still allocating costs. So then I would add that 5,000 to the bottom line. So now we're up to about 9,000. Okay, so now I see we have some loan interest that we paid. So now keep in mind, on our income statement, all we're reporting is loan interest. We do not report principal payments. Principal shows up on your balance sheet. All you report is the interest paid. Then we have our utilities. We spoke about depreciation, our maintenance. So this would be my concern. When I see maintenance at about 82,000, my first question would be, okay, are these ongoing maintenance? If it's something like you going through and painting, which is something you may have to do, or are we actually replacing an HVAC system, which that would need to go on your balance sheet. So it's just things as an accountant I would look for that just as a question, so it can help me better tell your story. So maybe this 82,000 that you have 82 properties and you allocated 1,000 per property for repairs and maintenance, then that's nothing. Then that would be very reasonable, and that would be the story. I would make sure that it's reflected in your financial statements. Okay, so now we're going to go into our equity statement. It's also called our retained earnings. So our retained earnings, now this is the kind of hidden part of the balance sheet. It's on the it's under the equity section. So the beginning retained earnings, that's an accumulation of your profit and loss throughout the years. So they're started at 50,000. Then what we do is we add that net income from our income statement, and here we come out with our ending equity balance of 54,000. So I want you to see the sweet things on how with accounting, everything ties together. So you can't, if you have someone to say, oh, you can just go ahead and just change the numbers on my profit and loss. There's no change in the numbers because everything has to tie together. And if you affect one transaction, that can affect two of your financial statements or 3 of them. Okay. Are y'all ready? What is our income statement? Oh, that's interesting. Okay. All right, so I'm giving a brain overload. So we're going to go through each of the answers. All right, so our assets, liabilities, and equity. That's our balance sheet. We had anything with assets, liabilities, balance sheet. So let's help, I'm going to help program income, expenses, and profit. That's our income statement or our profit and loss statement. Uh-oh. Okay, Martin's still holding on. Okay, come on, come on. I can't leave y'all on this Saturday morning. What is not income? That's money that's coming to you. This is how much money you're making. I know you know they will try and trick you on this. So what's not income is that accounts receivable, because remember that accounts receivable shows up on our balance sheet. So let's go through all of the items. Sales, that's if you're selling something. That's the money you're making in. Fees received, if there's a membership fee, that's income. Income and revenue, terms used interchangeably. interest received. If you have an investment out there, or if you're lucky enough to get interest off your bank account, that is interest income. And so the only one is accounts receivable. So what that does, that offsets the revenue that you receive. This is the revenue that people owe you. So that shows up on your balance sheet.
Quick question. Fees,
Sure.
is that true that there's really no taxes on fees?
So,
The
okay.
airlines use it, right? And hotels.
So I'm gonna tell you the beautiful thing of taxes. Don't try to use that in your business with these larger organizations. They will they have legislation to support them and back up what's taxable and non-taxable.
Hmm.
Any income you bring in, unless there's some type of tax clause for it, and this has been an interesting that could be a whole nother rabbit hole, but this has been a very interesting transition probably over the last 5 years for tax law.
Yeah.
I mean, it's been yeah, it's been kind of interesting in my little nerdy accounting tax law route to see different things evolve. So what I'm going to say is, you assume any income you collect is taxable unless you told otherwise.
Okay.
So let that be the surprise. So the beautiful thing is, like, we've gotten these general business tax credits, but it's a couple of exclusions that some businesses don't qualify for, where you can get up to $27,000 credit in your business income. They extended the Section 179, writing off the depreciation on vehicles, and they included luxury high-end vehicles that you can write off. So it's a lot of ways, if you are generating, if you have a large amount of profit, to offset some of that profit and then not penalize you if you're going to a bank for loans. So that's it. It's been a lot of but the gist of it, what's the
Finagling.
yeah, you prepare for the worst but hope for the best kind of thing. You
Yeah.
prepare to pay taxes on it until
Okay.
you, yeah. All right, so what is our revenue? Remember, I use that interchangeably with income. Revenue is income. I know it's Saturday morning. Y'all hold the door with the accounting. Look at this. All right. I got some accountants in the house. All right. So income is an enterprise received through various activities. Good. So what we gonna say, it shouldn't have been amount of money, buildings and equipment. This is used now. So that's now. I had somebody else, fixed costs and variable costs that have to be paid to trade. No. So anytime they have costs, the costs are associated with expenses. But great job. Okay, Mr. Martin. Damon is strong second. All right. Information that a business keeps in its accounting record includes its its revenue and expenses. So I'm gonna tell you the beautiful thing of your revenue and expenses. This is the core of how you're operating for a particular year. If you don't keep track of anything, and let me say, when I say keep track of, when I asked you early on, how do you keep track of your business or your personal expenses? There are some people that handwrite. if that works for you, I say do it, as long as you're tracking it. There are some people who use the app, some people who use Excel, whatever it is. At any point, if someone is asking, okay, let me see your P&L, you don't want to fumble. Because normally, and I'm going to say this especially to my construction people, if you're applying for a bid on a contract, normally they're asking for your P&L statement or they're asking for your balance sheet because they want to make sure that you have the capacity to handle a particular project. Or if you're going for going out on a state or government bid, they want to make sure you have that capacity. So with them saying this, if you don't have, so say if you don't have the means as of yet to hire an accountant, I would recommend you keep track of how much income you're making and what your expenses look like, whatever way you feel comfortable. That's the core of your business. You want to see where you're making money and where you're losing money. Because at the end of the day, this is a business. And if you, whatever your goal is for this business, maybe your goal is, hey, I just want this to be side hustle money. I want to generate $20,000 to $30,000 a year so that can allow me to do whatever it is. I want you to whenever you have that goal, you should know down to each day, what do I have to do in order to feed into that $30,000? If your goal is, I want to make this where I can quit my job full time and I'll be able to work for my business. I want you to think about whenever you go on a job, you've gone on the job interview in the past, you had no problem telling people what your salary requirement was. So I want you to use that same skill set on yourself in your own business. You wouldn't work for anybody else for free. So you need to figure out, how am I going to invest this time? And how much time do I have to invest so I'm making the income that I deserve and I know I'm worth? Because you're applying that same expertise to your business. And you already a millionaire, but you don't want to charge for it. So I'm going to say I'm going to get off that soapbox because I see a lot of businesses come. And when I ask them, my number one question is, how much are you paying yourself? And people start looking down at the grant. I said, so you would just go work for a random company for free? And if you're not paying yourself, what's your strategy to pay yourself? All right. Okay. So now we have Martin and Paige running neck and neck. Wait a minute. Adriana, you in here too? Okay. Okay. I got to get some prizes. I got to get some prizes now. So I want us to look at, as you look at your end of year, we're going to look at the income flows and how it flows into your retained earnings, which is also your equity. And remember, I showed you the balance sheet and how the income statement flows into your balance sheet. So that income statement information, your profit and loss, it flows into your equity because that increases or decreases your net worth in your business. All right, let's look at it. So understanding accounting helps managers and owners make better decisions. True or false? Okay, we're all superstars. I have all accountants in here. Lovely. That's it. I think regardless of whatever type of business you're in, you need, and if I can let you in on another little secret, half of it is organizing. Even if you have a strong admin person, I love, to me, that is the backbone of my organization. Having that admin person to keep the records organized, that will make life easier and you knowing where you want to go with your business. Because if you think about it, even when you're at home in your car, if it's too much chaos going around, you get a little murky on where you're trying to go. So it's the same thing with your business. Get those records straight. How much, which you're making money on, which you're not making money on, because it's a little trial and error. And saying, okay, well, now I see what I'm making money on. Let's put some more resources into that. I mean, it's your roadmap, and it tells your story.
Charmaine, can I add to what you just said?
Sure.
Probably one of the 5 top reasons businesses fail is because of their lack of fiscal controls and fiscal documentation. And so when asked to participate in various programs and to provide documentation on their fiscal history, a lot of particularly businesses of color haven't kept good records and aren't able to accelerate to the next level as a business. And what I found through my years of experiences, when businesses go out of businesses, is usually because they fail to meet the minimum auditing requirements in terms of just what you shared, in terms of being able to document use of funds. When the grantors come in or a public agency to ask them how they've expended those funds, their lack of documentation usually leads to them being disbarred out of a lot of different programs because of that lack of record keeping that you're talking about.
Yeah, and even to piggyback on it, I've heard a lot of organizations, especially nonprofits, will start off with other fiscal sponsors to help them with the tracking, and they're like, "Oh, good, they're tracking it. I don't have to worry about it." And that's not correct. I've helped a couple of clients where we're at the table saying the client will say, "Oh, I thought I had XYZ money left," and the fiscal sponsor saying, "No, we show much less than that." So even if someone is tracking your money, you better make sure you keep a track of it as well. And you won't be caught in the situation. I mean, this whole COVID time was prime example. All you needed to have your business taxes done and be in good standing. And they were throwing money out there. But if you weren't in that position at the time, if your business, if you had a business, it wasn't, and you weren't in a position, it was hard trying to get ready because the government was halfway shut down. They weren't responding. So you went to rush and file. But if for the businesses that had been keeping track of it, they were in they had access to the capital. But it's never too late. I think it's a great learning lesson because you never know when we will get an opportunity like that to expand. And it's even leveraging it for going after contracts. It's so many opportunities out there that unfortunately, you're right, Ron, our financials will exclude us from the opportunities. And I think it's beautiful. The co-op is beautiful because you can leverage different skill sets. So it's not falling on that one person to make sure that the financials, they're in charge of marketing, accounting, and this and that, and doing the actual work. But when you leveraging everybody's skill set and everybody is doing their part, that's a beautiful thing. So that you're ready for when the opportunity presents itself. So, okay, we're talking about what's the best way to get started. Now, this is no right or wrong answer. It's totally where you are in your business. So the first one is open up business bank account. But I am going to speak to that for the people that haven't quite decided which direction they're going to in business. What I say is, as soon as you create a business name and an EIN number, your next step is to open up a business bank account. Even if you don't have any business as of yet, you want to begin to separate your business finances from your personal finances. So if you want to loan your business $1,000, $500 to get started, then that's what we'll put on the book. This is a loan. Or if you want to gift them, if this is a donation, whatever it is, you have to draw that line in the sand to separate your business from your personal. Next one, tracking your income and expenses. Okay, we have one business there. Some people, this may be their strong suit, that they don't care if they make 1 penny or $100,000, they on top of tracking their income expenses. Creating the budget. This is your roadmap. This is what are you trying to achieve? What are you trying to achieve? And how much is it going to cost for you to achieve it? It's your roadmap. It helps you to guide you in a direction. Now, I don't want you to beat yourself up. This is a working document. So it may change from now to in the next 6 months. But it's just that that guide that keep you on track and kind of keeps you focused. And consultant accounting professional, let me just say, even if you're at the point, if your budget doesn't allow for accounting professional, I would, of course, I would accept any business. But I would also say you can also start with a bookkeeper. There are a lot of great bookkeepers out there that can get you on track with using, I think Mr. Martin, or no, Josiah mentioned Wave. That's a free app. I personally love QuickBooks. There's a nominal fee that's associated with it, but it's a whole bunch of them that are out there that if you're not quite at that point of an accounting professional, I don't want you to get discouraged, but there are ways and things that you can be doing in the meantime. So when you are ready, it's an easier transition. Because what I am going to tell you, on the downside, if you come to an accountant with a whole bunch of receipts and a whole mess, they're going to charge you, and it can get quite expensive. But if you come with a nice, pretty package and they only have to make a couple adjustments, it'll be significantly cheaper. I think this was the last slide. Did we have any questions?
Yeah, I have a question. For somebody like me who has a business that's not really functioning right now, right? I mean, I hope to do something in the future with it. So what kind of, you said that I did not open up a bank account because I wasn't having any business. That was my logic. So you're saying that I should open up a bank account anyway. And
if you anticipate doing business soon, are you anticipating doing business soon?
I guess I'll say no, because the answer is I don't know.
Okay.
Everything is like still up in the air.
I got you. So once you make that decision,
6 months maybe. I don't know.
Okay. So once you make the decision to say, okay, you know what, I'm ready to commit to the business, then I would say open up a business account before you actually start generating the revenue.
Okay. Thank you.
You're welcome. How about anybody else? Did I put y'all to sleep on this Saturday?
No.
No.
You do got to show the results, though.
Oh, I got to share the results. Okay, I'm sorry.
Yeah, I'm being petty, but yeah.
Oh, I got some competitors. Okay. Is
wow.
Dana in third? Tiffany number 2? Who's number 1? Is this Martin? Uh-oh. Martin. He's our. And Crystal and Jeff.
Martin got the app, the Spendy app, right?
Yeah. This is where being a teacher come in, because y'all get points when you answer quick. So it's not just about being right. You get points the faster that you answer.
So this is the in-house accounting professional. Oh, look at this Kahoot. I told you I'm new to this. It tells you who got 0%. Oh, that's what it is. They give you additional points because you're fast. So even if you're fast and wrong, you get good points.
No, you get like if 2 people get the same answer correct, but I answered first, I'll get more. You'll get more points, even if you both answer the same answer correctly.
But it looked like you getting points for answering wrong, Mr. Martin.
That's not it, Shy. That's not it.
I did have a question, particularly in our space,
Sure.
as around the cooperative and I guess structure for accounting. Um, so we're not a 501c3 nonprofit, and Cafe Credit is currently a program under that nonprofit. But how do you does it just become the managing member or the fiduciary management member when we, how do we offshoot it to still be a cooperative but not be reflected under the 501c3? I don't even know how to ask the question, but as a
So
501c3, how do we set up a cooperative under a 501c3 and still be able to give out ownership in the cooperative without giving ownership in the nonprofit? Is that more of an ESOP plan versus a cooperative model, or just a
uh,
question there?
nope. So you can create it. It can be created through your board. So through a nonprofit, the 501c3, your board technically owns the nonprofit.
Yeah,
So
that's it.
you just create it through your board.
Yeah, yeah. It becomes a project of the organization.
Mhm.
That's what it is. It becomes a project of the organization until you may launch it independently. So
Well,
you,
I guess that's the question, because the part of the cooperative is that the cooperative equity, which results in, it's not called distributions of the reserve.
Mhm.
That's a little bit slightly different from you know what a nonprofit, or even how nonprofits characterize it. So at some point, it would have to be its own entity, maybe with some ownership from the board in the 501c3. Am I tracking correctly there?
No, so you still can distribute funds. It's just how you write it up in your bylaws. You can still
Okay.
distribute.
Still distribute from a
Yep.
501c3. Okay.
Yep. So I think people have the misconception, because you're 501c3, no one can make any money. So they can make money through salaries, through profit it wouldn't be called profit distributions. It would have a different name. And I'm trying to think, maybe project. So we would just have to rename it, where if it was a for-profit, it would be profit distributions.
yeah. It'll be like having a business center inside of the corporation, like many of the multinationals do. They develop other subsidiaries of their companies, but yet those subsidiaries have their own financial recording for what they're generating in terms of profit and what they're expending in terms of their revenue and expenses. But again, it'd be a subsidiary of the parent 501c3, and until you launch it as an independent entity in itself that would have its own legal governing structure.
And then it would be called surplus distribution, I believe, for co-ops, as opposed to profit.
Mm.
Oh, thank you. Thank you. That helps a lot.
Was that the construction? That was the construction co-op?
No, yeah, that's Khalil. This is more of a creative collective co-op.
Yeah, no,
Gotcha.
yeah, that's
Cafe
part of the same entity though. Yeah.
Okay, gotcha. So how many other 501c3s do we have? Let me see if I can. Anybody else are 501c3?
Well, I work in with Plantation Park Heights in Baltimore, and they're a 501c.
Okay. Do we have any for-profits? Any LLCs on here, or any?
So
I'm a
our construction cooperative operate. Yeah, we are supported by Care Institute, but we're operating as LLC.
I got you.
Virtual village as well.
LLC. Okay. Now keep in mind that LLCs, that tax is treated a little differently. That all of the profits funnel down to who are all of the members. you do have to claim that on your taxes at the end of the year. So that's
But you can change that structure too, like file as a C corp, right?
if you're a C corp, yes.
LLC filing as a C corp, then the taxes will stay
Well,
within the LLC.
well, it
One
so
state.
usually you'll change to a LLC as an S corp.
Okay.
Now, if you change into a C corp, that's a totally different entity. Then the C corp, you become shareholders, and the corporation is being taxed. And then
Well, Ms.
shareholders.
Davis, I'm sorry. Yeah. Can you go into that just a little deeper? I'm here in Indiana, at least part of cooperative law, there's an opportunity to operate even as a T Corp in your cooperative for the ability to retain earnings and so forth, all those kind of things. Can you just kind of talk a little bit about just a brief overview? I know that's deep, but just kind of the difference or at least the advantage of TCS and C Corp, please. I know that's not, I don't know if you do that simply, but at least the T Corp relative to the cooperative would be helpful, because I know a lot of cooperatives are operating, you know, as a T Corp for some of that other tax sheltering as well.
So you know what's interesting over here in Maryland, that is not as prominent. We have more of the B Corps and the LLC. The B Corps are much more prevalent, and the B Corps are a combination between the nonprofits and for-profit. So, okay, let's back up. So limited liability. The limited liability company, it can be treated as two ways according to the federal tax record. It can be treated as a partnership or S corp. So the difference is tax-wise, they flow the same. You will each be issued a K-1 and it will flow into your personal tax return. Now, with the partnership and S corp, if you have, it doesn't matter if the profit was like the cash was given to you, you're still reporting that as a part of your taxes, regardless if you received the cash or not, whatever that percentage is of the profit. So let's switch over to the corp. If you're a shareholder, you're only paying taxes on what was cash given to you, whatever your dividend was, or whatever your cash payout was. If nothing was paid out, all that is going into your equity and your investment in the corporation. But then the corporation is responsible for paying taxes on that net profit or loss, on that net profit. So that's where it's a little but I'm gonna tell you the pros and cons to all of them. Corporation, that's the ultimate. It's expensive to file out of all of them because it's highly regulated. And it's nothing wrong with it, but they have beautiful tax shelters like that on the C Corp. During the last administration, they just reduced the corporate tax rate down from 35 to 21%. So that's almost the same rate as personal taxes. It is the same rate as personal taxes. I mean, that has never, ever, I'm 49 years old, that's never happened in my years of life. So that was just an amazing thing that the corporate tax went down so low, and they also had different benefits to being a corp. But I just want you to know, on the flip side, it is an expensive organization to maintain because you do require structure. So it's difficult for it to be a one or two person corporation. You need everyone has to play a role in that. So with the LLC, the beautiful thing about LLCs, because it provides flexibility and it provides a level of protection where it's not as complex as the corporation. So with the LLCs and the partnerships.
Excuse me, Ms. Davis. Adriana, can you mute Mr. Hands for a moment? Because I'm having a hard time hearing Ms. Davis. Thank you.
Oh, thank you, Ms.
Pardon me, I'm sorry about that.
Okay. So the beautiful thing though with the LLCs, regardless if it's a partnership or an S corp, that provides a level of protection. Now it really depends on your operating agreement. with if you're going to be the difference between that partnership and that S corp. And because tax wise they're the same, but the S corp it has some slightly different rules. So I'm gonna give you a couple right off the bat. Say for instance, you plan on you are a partner of the LLC, and you don't plan on taking a salary, then the partnership may work best for you. However, if you do plan on taking a salary, the S corp gives you that flexibility to take a salary. So on a partnership, you have to do draws. On an S corp, you can take a salary as a partner. So it really depends on what direction you want to go in, how large you want the entity to be, what's going to be how many people, how many members you want to have involved, to determine what type of entity you want to create. The other thing is you can always transition over from one entity to the other. So maybe, for instance, you start off as a partnership because you say, you know what, we're not drawing salaries. It's just 2 or 3 of us. It's real simple. I want it where it is not that complicated. And then eventually, for whatever reason, something blows up and you say, okay, you know what, we're going to transition to an S corp. That's an easy transition. It's also an easy transition if you say we want to jump to a C corp. Me personally, I haven't done as much with the T corp. I've done more with the B corp over here in Maryland. So they're easy to transition with. It's just a matter of notifying the federal and your state agency on which entity you want to transition to. Did that help or?
So no, that was very helpful, and I didn't misspeak. I meant S
Yes,
corp.
very helpful. Thank you.
I've done it in other businesses as well. I guess come back to the question in certain senses, if it a nonprofit could still have ownership in a LLC, a for-profit LLC, primarily set up as a S corp in some cases. I mean, I guess whatever it's set up as, but a nonprofit LLC.
So I'm gonna stop you there. So that you're saying the nonprofit would be one of the members in the S corp.
Yeah, I mean that's the only way I'm seeing it in my mind. If the S corp LLC is still trying to be for profit and things of that nature.
So it can. The only thing it has to be is just disclosed.
Okay.
You just got to disclose, and it's a place on the tax return where it asks you, okay, is this affiliated? Is this the sub or parent of for-profit entity? So you have to show that relationship to the IRS.
And in that case, the LLC, the board wouldn't the nonprofit board wouldn't necessarily be the ones putting the operating agreement in the governance. They would just be a partner in that with other members in the LLC.
Right. They would be a partner. Yeah.
I had one question too. This is for another business. Sorry, but is it correct that sometimes when you change your LLC over to an S corp, you have to then start to do W-2s? It can't all be 1099s.
Right. So that's what I was mentioning before. Yeah. So that was the and it's no right or wrong way. It's what works for your business. Because when you go to W-2 employees, it becomes a little more expensive because you have to worry about payroll taxes, payroll tax filings, and 1099 is just like, look, this is what we paid you. We're gonna give you this 1099 at the end of the year.
But you're almost forced. I mean, you're almost forced to do W-2s if you do transfer over to an S.
Well, you're not forced. Okay. Yeah, it's still a little flexibility, but normally the reason why most people transfer over is to do the W-2. So say for instance, if you become your business grow larger and you're working full time for your business and you don't want to have the tax liability at the end of the year, then you would transfer. Then that's
also,
what
I'm sorry. It's also a tool too to kind of avoid double taxing.
Yeah.
Okay.
Yeah. Yeah. So it's a lot of flexibility. It just depends on what direction you want to go in, and especially in the co-ops, you can even have multiple businesses as a part of the co-op, and everybody, and then it funnels down to their members. So yeah, it's a lot of flexibility in this space.
Ms. Davis, in the case of multiple businesses combining to form the co-op, which of the, would it be the S or the B Corp that could be, I guess, formed with the multiple businesses? I guess that's where I get lost.
So then my next question would be, are we looking to be for profit or nonprofit? Like, what would be the goal of that organization? So say, for instance, if it's a membership driven organization and they're being an advocate for a particular cause, then that may be better suited for a B Corp because it's more of a nonprofit kind of driven with the possibility of making a couple proceeds. But if it's more of a for-profit mission, like, okay, so we're all joining in maybe to become the first thing that popped in my mind was a CDFI, a community development financial institution. We all join in and everybody going to put a pool of money in so we can lend out to other businesses. Then that would be a for-profit. So it would be a S Corp.
Is there a way to have both components? Like that's where I keep. It's like you got to choose between the social side and the profit side. Is there a way to have both?
Yeah.
Okay.
So the only difference between a nonprofit and a for-profit is your mission to generate profits. So if your mission isn't to so for a for-profit, I have a different conversation. I'm looking at the bottom line. For a nonprofit, I'm looking at your budget and how are you faring with your budget? Because on a nonprofit, the budget is break even. Okay. All of your incomes should match your expenses. Because your whole mission is not to generate a profit. If you generate a profit, it's like, oh, okay, we generated profit, it was okay, but that wasn't your overarching goal. Where for profit, you're in it to make a profit. It's no question.
But just to elaborate on Tiffany's question, but to I guess this is a question. As a B Corp, it is a for-profit company, but it has impact measurements in it as well. And then I guess the follow-up question to that is, are there tax benefits for being a B Corp somewhere in between profit and nonprofit? Not really.
No, it is. It is.
So you still tax the same as a for-profit as a B?
It is not taxed the same. Okay. So I do not remember that. I would have to look that up. I don't remember the B Corp tax rate. It is a little lower and a little lenient than the S Corp. And I don't think the B Corp, they didn't get hit with any new legislation. So I have to look up the B Corp. But I know for the nonprofit, it's not taxed at all. And then for the for-profit, it would be, just be taxed at whatever tax rate. If it is a S Corp or LLC, it would go to your personal tax returns. So it is a credit. I'm sorry, it's escaping me on the B Corp, but I could get that. I can get you that information on that. So you can be a socially driven, a mission driven for-profit organization. I don't want to say that, and my mind, I'm a numbers person, so it doesn't matter what your mission is, and it doesn't. If you're saying, I think the word profits, being for profit or working for profit, has become I don't want to say demonize, but it becomes a bad term, like, oh, they're trying to make a profit. In the way that I see it as an accountant, everybody is working for money, and regardless if we want to admit it or not admit it. But we need money. That's what drives the society. It's a capitalistic society. That's what drives it, good, bad, or indifferent. So I don't look at it as in terms of that, but it depends on whatever your mission is within that. And if your mission is, so I'm gonna give an example. I have a community association. They have two organizations. One is nonprofit, one is for profit. So the nonprofit, they leverage that so they can apply for grants and do things to improve their community. The for-profit, they leverage it because, say, for instance, someone in their community, I don't know, sells T-shirts, that they are saying, okay, we're going to help market you to sell your T-shirts within the community. We're going to showcase, we're going to provide that marketing. And the part of that is we're going to charge XYZ fee. And with the XYZ fee, we're going to make sure or guarantee that the next time we have some type of community association event, that everybody is using your T-shirt business to do it. So they're looking at it as more of a business structure. So for us giving you these 100 T-shirt business, we're charging 15%. And with it, it's their profit driven, even though they both of the organizations are still uplifting and providing economic support in the community, they're just doing it different ways. So on the nonprofit side, it's strictly for grants, and it's strictly for to utilize the or leverage whatever government support they render to the nonprofits. And on the for-profit side, okay, they say, okay, it gives us a leverage, because keep in mind there are restrictions on the B Corp and the nonprofit that you can't do that you can do for the for-profit. And one of the bigger ones is the whole political lobbying. So for when you become on a nonprofit, you don't have that flexibility. So it really just depends on what you want to do within your organization and what's allowable and non-allowable. I'm gonna say the other thing is, and this became a big issue even with the Catholic Church, is gambling. So gambling is considered illegal. I mean, some nonprofits aren't allowed to gamble. So the gray area became bingo. Is bingo considered gambling? And you notice that a lot of nonprofits were running bingo halls. So then the shift had to become, okay, well, now we got to do a for-profit entity to run the bingo hall. But guess what? All the proceeds from the bingo hall goes to the nonprofit. So the for-profit has the write-offs. Okay. Did I lose my people?
No, still here.
Okay.
No.
So I'm sorry. I don't remember the original question, but I don't know if but I think the whole point is that you can be wherever you want to be. It just depends on if it's within the law or if it's not restricted within the type of you're trying to get. And the most restrictions are the nonprofit. And and then the for-profit, you kind of have free reign. That makes sense?
Makes sense.
This page, did that help?
It did. Thank you very much. And thank you, Damon, for your follow-up question, because that helped us.
Something I'd like to take this moment to just mention is that Ms. Davis actually will be back. So you can make sure that if you have any questions that come up and there's things you want to ask her, she actually will be back for another session later in the academy. And I know we were talking a little bit in the beginning about how to best market yourself in order to get a loan. And so we are actually going to be having presentations from people from Shared Capital. And so they're loan officers, and they're going to be talking a little bit about that process as well. So just for any outstanding questions, know that you'll have a bunch of opportunities to get those in.
Well, I want to take this time to thank everyone. This was I enjoyed this session. I think we got into some deep discussion, and I'll have the answer to the B Corp for my next session. And I can even give a little. I'll have a couple of slides on types of entity because I like the way our discussion was going, and I'd rather have us have this discussion early on so you can make the right decisions for your business later on. I'm excited. So thank y'all for sharing y'all Saturday with me. I appreciate you.
Thank you for sharing. Very helpful.
Thank you.
Thank you.
Yes.
Well, Charmaine, we're always appreciative of what you bring into the space, being a CPA working with businesses on all levels, small, medium, and large. And I know that the conversations that we spurred this morning are very valuable. They'll get a chance to interact with you again, as Adriana has said. And hopefully the information that you're sharing and the combination with other information that they're receiving will give them a better insight on what it is and what they need to do to build their businesses to be more sustainable. Not just starting, but starting and growing. And so you know how that can be impacted by the knowledge and the work that you put in terms of your foundational work as a business. Are there any more questions anyone may have before Ms. Davis leaves the room? Because she has some, it is still tax season for her. And so I appreciate her owning up to the early commitment to be in this space with us this morning. But I want to be onerous and honoring her time that she has as well. So if there are no more questions, we're gonna thank Ms. Davis, and we'll see you in a couple weeks. Good workings during your tax season. I know you're out there. As I say, ain't a bad thing making money. So thank you, Charmaine, and we'll talk ourselves offline at another time.
Okay, perfect. Thank you, and nice meeting everyone.
Thank you. Oh, all right. So you know, these last sessions have been really great sessions in terms of the information that you received and how you've interacted and sort of I will use the word probably exalted our presenters to really engage in real meaningful conversation, dialogue around the pressing questions that you had. We want to take a 15-minute break. I'm going to have to be stepping out of the room. There's a CRA meeting that's going on in Baltimore that I'm committed to attend. And I will just say this here to you, all of you, who, no matter where you're working, there is a movement afoot to look at getting more resources into Black and Brown communities. And so there are about 8 cities that are right now committed to this effort to move banks to do more investing in Black and Brown businesses with Black and Brown nonprofits to support a variety of economic and project related work. And so I'll be able to share some more of that with you in the next week to come in terms of how you may get your city engaged and how you could be emphasis for doing that. But I think, let me just check in. Is there anything that, Adriana, that we need to share with folks that maybe we can close out at this point right now? Because it was a very intense, knowledgeable session. And so maybe we can allow folks to leave the room for today. And then you and I and Michelle can do a normal wrap up.
Yeah, the only thing I would mention is, as I mentioned in the very beginning, if you don't have a team meeting set up, so this morning we had the team from Indianapolis, the KI and Creative Cafe, we had them. We have PPHUF, the Plantation Park Heights, we have you all on the map. But in terms of some of the other groups, we don't all have meetings set up. So I know we still need to look and meet with Virtual Village. We still need to set up a meeting with some people that aren't even here today. And so just keep that in mind. And then I would also add, just as a side note, at 1 p.m., everyone's going to get their post-session survey, and so just make sure you complete that when you get it.
Yeah. I think those are the only things I think that we need to, and I think I'm feeling, I'll verify, but I think they might have extended the deadline for the up and coming conference. Again, I know we have Jill Gordon and Crystal Foreman have registered. Did both of you get your registration form by email?
Yes.
Oh, good. Well, I look forward to sharing that space with you. For those others who want to attend that conference, even though it's really directed at food cooperatives, there's a lot of information that goes on in that conference that you can use in terms of cross-referencing the work that you're doing in building your cooperative businesses. So if you're interested in attending, get to me soon as possible so we can get you registered and get you on the list of folks. So with that said, we're gonna just dismiss for this afternoon. Allow you to go into your own spaces and have a safe and healthy weekend. LaRon, you and I and Miss Page are scheduled to meet Monday at 5. I confirmed that. And I have Adriana send an email out to both of you. Other than that, if there's any other questions you may have before we leave, that you feel if there's a pressing question, you can present them now, or we'll wait till the next session, which is next week. And our presenter next week is Adrian. Is who we having next weekend in the room?
Next week we're having Miss Jennifer Fun.
Business planning. For those of you who not begin to think about a business plan for your businesses, this is a person I certainly look forward to having. Ms. Fun is a really hands-on person in terms of helping small businesses develop business plans, and Charmaine mentioned all the financial, and Adrian Harpool mentioned the marketing a week ago, and all these components are really a part of your business plan that's going to really talk to lenders and other people about who you are and how you envision your business going. So we're looking forward to next week's business plan. So with that said, we're gonna dispense and meet up again this time next Saturday. Appreciate all your time and energy, folks. If there's some issues that you may have, contact Adrian and of course Michelle and I during the course of the week. Look forward to seeing you again. Have a blessed Saturday. And for those who are in warmer climates, enjoy. For those who got a little chill on, wrap up. And we'll talk next Saturday, folks. Thank you.
All right.